Hello, everyone, and welcome to the program Discourse on Global Television. I am Samuel Odi. Many thanks for joining on today's edition of the program. Today, we'll be turning our attention to a topic that is at the heart of every Nigerian. That's looking at the tax reform bills, and also we want to give the general public a proper perception, a proper information on what this bill actually is, what it means to the Nigerian economy, what it means to the common man, and what it means to those that will be paying more and those that will be paying less and those that wouldn't be paying at all. So there's a whole lot of narrative going on in the social media space where lots of information are being, passed through. Some of those informations are actually not the proper information that is meant to be consumed by the general public. So on today's edition, we want to educate people properly on what this tax reform bill really is, what it means to the woman selling pepper in the markets, to the man that works in the central business districts, to the government workers, to those who earn minimum wage, and to those that, are entrepreneurs that earn less than the minimum wage in a month. So we are going to cover all of those angles on today's edition. But before we go further, let me bring you up to speed. The Nigerian government pushes for a comprehensive tax reform bill, which is aimed at modernizing the country's tax system, expanding revenue generation, and reducing over-reliance on crude oil earnings. What with a tax to GDP ratio of less than 11%, far below the African average of 18%, Nigeria faces urgent pressure to improve domestic resource mobilization. So we'll be looking at it from multiple angles. We'll look at the positive impact of this tax reform bill. We'll look at it from the angle of increased revenue mobilization, expanding the tax nets to capture the informal sector could significantly boost the government's income, more revenue for infrastructure, education, healthcare, and social services. These are one of the positive measures. Another positive measure is around economic diversification, which means reduction on dependence or reduce dependency on oil revenue, encourage taxation of digital businesses, properties, and high net worth individuals. Also, it looks to improve investors' confidence and the ease of doing business. Simplifying tax codes and harmonizing multiple tax agencies could reduce bureaucracy, bottlenecks, and a clear framework creates stability and predictability for local and foreign investors. We'll be looking at that. Those are on the positive note. And also still on the positive note, fiscal federalism. States may gain greater autonomy to generate and control their own tax revenues. Okay, could also reduce over-dependency on federal government allocation. If you remember, the Supreme Court has given a verdict for the local government to have its own full autonomy. So all of this now are the same trajectory of having state and local government areas have their full, what's it called now, autonomy on taxations and all of that. Then let's look at the possible negative impacts and challenges that it may cause if this bill is not properly passed and if it's not being followed through to the teeth. Then it's going to have a lot of burden. That's talking about the negative impact. It's going to have a burden on small businesses and household if poorly implemented. Higher VAT or new levies could be increased, and the cost of living will also skyrocket. Small and medium enterprises, that's talking about SMEs, may face compliance and burdens. Risks of multiple taxation without proper coordination between federal, state, and local governments. Businesses may continue to face overlapping taxes. That's if it doesn't get properly implemented. Then looking at the informal sector resistance, many Nigerians operate outside the formal tax net. Enforcing compliance could be difficult without incentive or trust in the government. Inflation pressure is also there. Taxes on consumption, e.g. VAT, excess duties, all of that will be looked into to may fuel inflation even if passed on consumption. You know, a lot of persons, Nigerians, are arguing and raising eyebrows around the fact that 5% will be charged based on fuel that is being consumed or purchased. That has been around since 2007, but the fact that Nigeria has been on fuel subsidy, so the government since 2007 hasn't properly, implemented this. So now this is just coming up, and this is not one of, based on the information we've got, this is not one of the initiative of this current administration. We'll have all of this conversation and bring you more light to the 5% around fuel. Also, broader economic implications. We're still looking at the negative angle if this is not properly implemented. Short-term possible resistance from businesses and citizens, inflationary tendency and debate over fairness of tax burden. Medium to long term, if well executed, the bill can stabilize public finance, reduce debt dependency, and fund critical infrastructure projects, laying a stronger foundation for sustainable growth. So we'll look at it from the general understanding, but before we do that, we're going on a very quick break, and then when we return back, I'll be introducing my guest, who is a tax expert, who would help us do justice to this talking point today. Stay with us, we'll be right back. Yes, many thanks for staying with us. If you're just joining, this is Discuss, and we're about to have a conversation. Joining me virtually to have this conversation is a tax expert in the person of Mr. Johnson Olugbero. Good afternoon. Thank you for joining us on the Discuss today.
Good afternoon, Samuel, and good afternoon, viewers at home.
Yes,
Happy to be here.
Yeah, so let's get right into it. There's just been a whole lot going on the social media spaces. Nigerians are angry, ranging from the 5% on tax, also conversations around even if you earn around 800,000, you're still going to be taxed by the federal government. There's just a whole lot going on. So just want to sanitize and also give proper information to the general public on what this tax reform bills actually, what it means to the general public, what it means to the Nigerian economy, and what individuals will actually be paying, who would pay more, who would pay less, and some that wouldn't even pay at all. So let's start from the general understanding. What are the key provisions, Mr. Johnson, of the new tax reform bills, and how do you think they differ from the existing framework?
Okay, so thank you, Samuel. We've had this conversation on this program a couple of times.
Yes.
But because of the sensitivity of the topic, I think we've not even had enough conversations.
Yes.
So basically, the reforms, as it has to do with the Nigerian Tax Act, which will be implemented from January next year. Like you rightly said, the average Nigerian is angry. What does it mean to the general public, you asked me. And the answer to that is that it means different things to different people. But I can go that there is and there is no reason to be afraid. Unfortunately, and even the likes of Taiwo Oyedele and some other, well-meaning Nigerians are trying so hard to, educate the public and provide the correct information. We also see instances where, we have more of the misinformation that's circulating out there. Let me pick the 5% surcharge, that you just mentioned, because that's like the hottest, in the now that you're talking about. If you look at the Act, you will see it in Chapter 7 of the Act,
yes,
where the Act says that there will be a surcharge that will be imposed at 5%, on chargeable fossil fuel products. By that, we mean the CNG, PMS, LNG, and all of that. And I know Nigerians are angry because the promise that was made to us at the onset of this committee work was that they want to harmonize taxes and even reduce the taxes into the barest minimum. And so Nigerians are angry that why are you on one hand to reduce taxes, and then in the same act it looks like you are imposing new ones. But in fairness to the committee, this 5% surcharge is not a new development.
Yes.
It is something that has been in our law as far back as 2007, when the Farmer Act was amended. Revision of it. The only thing is that it hasn't been implemented just yet.
Yes.
And I think in the wisdom of the committee, rather than just leaving that one out there, because this new piece of document that we now have is what will now, regulate our tax administration. And the idea is that all taxes that are still relevant in the country should be reflected in the Act.
Okay.
And so they just transferred it from where it was. So rather than it still sitting down in the FEMA Act, they just took it from there and also just harmonized it, into the Nigerian Tax Act. Because if it is not mentioned at all, there is this thing where there's an existing, there's an old law, and then there's a new law that is silent on a particular provision. So it can create a bit of legal tussles here and there. So the committee thought, in its wisdom, is best to mention it and just leave it there. But thankfully, Mr. Yodele himself has come to do some clarification on this, that it doesn't mean that this particular 5% surcharge is implementable from January next year.
Yes.
Because if you look further in that same chapter 7, it says that, it's the minister that will, it has to be gazetted
and determined
before implementation and all of that. So we hope that they will review. If you ask me, in my own opinion, I think they should have just completely do away with it, because we already have a new development levy, right?
Yes.
Which is about 4%.
4%, true.
Which is about 4%. I would have preferred a situation whereby, they have harmonized this sort of thing, into just one number, so that I don't have to be thinking about so many numbers, in my head.
Yes.
But then, if you do that, some persons will say, okay, well, it's only applicable, because the whole idea, right, is that the fund, this fund is supposed to be used for road development, basically.
Yes.
And so somebody can argue again and say, well, I don't have a vehicle, so why should
I pay?
charge me for that? But the whole idea is that everybody uses road one way or the other, whether you drive a own vehicle or you take public transportation. The whole idea is that this 5% is supposed to be deployed into that sector, and ensure that we have good road, particularly in the rural area. But how the money will be used is another argument entirely, right? And the other thing is that this also has strong implication on inflation. One hand we're trying to bring down the price of fuel.
Yes.
By the time you add this, what that means is that you will pay more for fuel. Naturally, you will pay more, because there's going to be an extra 5% of some sort. So if I'm buying fuel of 1,000 naira, it means that I'm actually not going to get the full value of that, because the system will have been calibrated to ensure that that 1,000 is VAT inclusive. And if it's VAT inclusive, that means that what I will be getting in fuel will be a smaller number. So that means I will be paying more to buy fuel. And what that means also is that the cost of transportation may increase. And in my own opinion, that is almost counterproductive, because I've heard Mr. Oyedele himself several times, promise us that one of the areas that they seek to subsidize is areas of transportation, area of health, food, agriculture, and all of that. So you can't be doing that with the right hand, and then you are using the left hand to impose a 5% surcharge. I honestly feel, at least not now. They should have just, leave it and just let it be. They should have repealed, that provision of the FEMA Act. And then, in terms of now, I'm moving away from the 5% now.
Yes.
Generally speaking, right? Generally speaking, if you look at the whole act holistically,
yes,
the truth of the matter is the average Nigerian that is going about his or her business and doing his thing has not so much to fear, especially anybody that is earning below 20 million. And based on statistics, maybe you will find not less than 90% of Nigerians that are in this bracket, right? We will have about 90% of Nigerians that are earning below 20 million.
20 million.
In many instances, some that are even paying now will not even have taxes to pay by January. And some that are paying some amount now will, in fact, even pay less, from January. The way the tax is structured, the new tax rate are structured,
yes,
is such that is those who are really big earners that will really pay more. So those are the categories of people that will pay more. In terms of businesses also, if you are running your business and you are doing 50 million naira and below, you in fact you are not going to have taxes to pay, which means that if I'm to counsel someone,
yes,
I would say rather than just using your personal account, rather than using your personal account to do business,
yes,
this might be a good time for you to go and properly register
Register.
your business,
Okay.
so that the proceed of that business activity is captured as a business income.
Income. Okay.
And because if you earn 50 million as an individual, it's taxable. But if you do that as a business, if your turnover is 50 million, you won't have taxes to pay. So the whole idea is that we want to encourage, I'm saying we now, not like I'm part of the committee.
Yes.
I'm saying the government,
Yes.
wants to encourage, development of, business, particularly the informal sector, so that all those market women who are just doing business on their own and all of that, they don't now have anything to fear. They can now properly register their business, knowing fully well, that they will enjoy a lot of incentives. You also mentioned the 800,000
yes.
people earning 800,000. So here's how it works.
Yes.
There's also a lot of misconception about
Around that. Yes.
It is where after your gross earning,
yeah.
there are some allowable deductions, like money you pay to your pension scheme, to your NHI, that's the National Health Insurance Scheme,
yes. Housing scheme,
and a few others,
yes.
right? Those are allowable deductions. So let's say I earn 1 million, for instance, and then some deduction, maybe in terms of pension, NHIS. If I also have interest that I'm paying, maybe I took mortgage to build my house, and it is my house, and I am paying interest on that facility. Those kind of interest is also allowable deduction. So all of that will first be given as a relief. So let's say all of that now amounts to, say, 200,000. I'm just saying.
Yeah, 20%, which is 20.
I'm left with 800,000.
Okay.
It is the 800,000 that we will now start. That will now be like my chargeable income.
Yes.
So if you add the deduction, what you have is either 800,000 or below.
800,000.
Then it is be at zero. It will be zero rating, so you won't have any tax to pay as an individual.
Yes.
That's the way it works. And the other thing is that we used to have what we call, I don't want to get too technical, we used to have what we call the consolidated relief allowance, which we used to compute in some ways before, but now that has been removed.
Yes.
So what we had in the old structure was that you will be allowed to make those deductions. Those deductions are still allowable even in the new regime.
Okay.
The only difference is that the consolidated relief allowance that we used to have now, we will no longer have it in January. What we now have is just rent allowance.
Okay.
And that rent allowance is going to be 20% of the rent you pay, not the one you claim. You have to bring receipts. You have to bring receipts and show that maybe, the tax authority may even ask you to supply your rent agreement and all of that. So if you're paying 1 million rent, you are allowed a relief of 20% of that sum, 20% of 1 million. But the law says that the maximum you can get in terms of rent relief is 500,000. So even if you are renting a house in Banana Island,
yes,
or Ikoyi or Maitama, the maximum you can get in terms of relief is only 500,000 naira. And that means for the rich who are living in luxurious apartments, that means they will have less relief. So that's why, and that's where they will be paying more. So next year, the rich will really pay more. I had a training session with some people last 2 weeks, and I was showing them in real figures.
Yes.
How that somebody that was earning maybe like 30 million, almost double of what he's currently paying now. But the average Nigerians don't need to worry. They will actually pay less next year. It's only the high earners that are likely going to be paying more. Okay. And the other thing again is that people are also worried that, okay, what if I am living in my own apartment and I have already paid the mortgage? I spoke about the interest if you do facility, but now imagine somebody who built his house, maybe he didn't even take loan
to build. Yes.
So for that kind of person, he will not necessarily enjoy that rent allowance unless you are living in a rented apartment. So that's one area where we think, is not. We feel is not equitable, and in terms of the principle of taxation, taxes ought to be equitable. But I mean, it's already a lot, so we can't cry over spilling milk. Yeah. I think these are some of the information that might help our viewers at home.
Yes, okay, let's look at it from this other angle because you've literally done justice to this. But there's another angle I want us to look at it from. Looking at it from the business perspective now, producers of let's use bread for instance. Someone selling bread now, who produces bread, that's talking about those that own bakeries and all. How does this tax bill now, this new tax reform bill now, how does it affect them? Because Oyedele was making mention of the fact that the consumers will not be charged VAT, but at this point, the producers of these products now will be charged VAT. So how do we balance this, and how can those producers now of these materials now make profits?
Okay. So let me. You have used a good example. Bread ought to be a lucrative business now from next year.
Yes.
And here is why. What we have presently is a system where bread is on the exempted list. And let me explain what that means to you.
Yes.
So how do I make bread? I will buy sugar. I will buy flour. I will buy some other baking materials. Right?
Yes.
I will do transportation and so on and so forth. Some of the inputs that I'm going to use to make the bread are vatable inputs. So which means that in producing that bread, I might have incurred VAT. But because bread is dead.
Yeah.
So when I'm selling my bread, I cannot charge VAT on it, right?
Okay.
What that then means is that producer who has incurred VAT in producing the bread, but he cannot charge VAT on the final product.
Yes.
So he is the one who will own the liability. So he is the one who will bear the liability.
Okay.
So what he will then do in essence, and you can all see how bread went from 350, 400 naira just a few years ago.
So 2,000,
3,000,
yes.
Depending on where you buy and the brand that you are patronizing. Because what the bread manufacturer will cleverly do is to add that VAT and add it to his own, because he has to recover his cost somehow.
Yes.
But what they have now done in the new law is that it is now zero rated.
Okay.
Rather than saying, now to the buyer of the bread, it doesn't make a difference.
Okay.
But it makes all the difference to the producer of the bread. The difference between zero rated and exempted.
Yeah.
Remember, I said currently it is exempted.
Yes.
When it is zero rated, that means that you can claim your input VAT. It is still VAT, only that it is zero rated.
Zero rated, okay.
So which means that any input VAT that you have suffered up until the point of sale, you are allowed. There's a mechanism that allows you, to recover that amount, and then you don't have to now transfer that burden to your final consumer.
Okay.
So these are some of the clarification that I'm sure will help our listeners and our viewers.
Yes. Now, another major concern now is around the amount of monies that come into an individual's account. Looking at it now, how does a tax agency, work around personal income tax and also, let's say, gifts. For instance, now, you are a family man, you send money to your wife, or maybe you send to your parents, and all. How can all of this now be calculated so as you know what will be taxed and what wouldn't be taxed? So how can all of this be, properly actualized?
Okay, thank you very much. So if you look at the very beginning of the act,
Yes.
it took time to define what is a chargeable gain. We are looking at income, we are looking at profits, and we are looking at gains. And it goes on to say that any profit or gains that that a company or enterprise has made from the activity. For an individual, it talks about income of any individual or family.
Okay.
And it goes further to tell us, unlike what we used to have before, things like honorarium, gifts, and all of that, which we used to hide on and say, well, this one is not, this one is a gift and all of that. In the new regime, any sort of income, you will have to account for them.
Okay.
And I'm choosing my word carefully. Account for it. It doesn't mean that you automatically may have to pay taxes on them, but the system is structured in such a way that you will now have, to be more accountable for what you earn. Whether it is including gifts and honorariums and all of that, even talk about compensation bonuses, even up to benefit in kind. Is it like benefits? Maybe you have a driver, or you have an official car, or you live in a company facility, and you are not paying. The value of the rent of that property that you are living is going to be added to your salary, and it will be deemed that if your salary is 5 million as a director, and then you occupy a business flat somewhere,
yes,
and maybe the market value of the rent there is another 5 million, it will be deemed that your actual salary, your actual employment income is 10 million, and so on and so forth.
Yes.
And the reason for that is because there's a whole lot of dishonesty within our tax landscape.
Okay.
It goes on to say salaries, wages, allowances, compensation, bonuses, premiums, benefits, or other prerequisite allowed or given or granted, but it goes on like that. So that is correct. However, whether bank, there's another misconception.
Okay.
Where somebody said, "Oh, bank, that means that banks can now, once there is money in my account, does that mean that the bank can just tax it?" No, that is not how it works. The only thing is that they will have you account for it. So you have to then explain. We're processing for a client, and who is into interiors.
Yes.
And they deal with doors and all of that. And because of the nature of the transaction, the account will be heavily, a lot of inflows will pass through their account, many of which are money that they need to use to buy materials. Doors in themselves are expensive. Wood is expensive and all of that. So, but when we sat him down and we said, okay, you have to tell us, can we see the invoice for each of these transactions, and which portion of this transaction is your own service fee?
Okay.
By the time we did it, we told him there's nothing to worry about. You only pay taxes on what you're meant to pay taxes on. The one that is for material, you will pay whatever transaction taxes that apply to those.
Yes.
But it doesn't mean that every money that drops in your account on your credit side is automatically taxable. That's not how it works.
Okay.
And that is definitely not what the tax law is suggesting.
Okay, let's okay, with all of this being cleared now, what measures are there in place to tackle tax evasion? But before you answer that and the corruption aspect, what role does withholding tax play in this new tax reform bill?
The it's a big, and the two answers are connected. It plays a big role.
Okay.
It plays a big role because one major deviation from the norm from January
Yes.
is that, when people prepare their accounts now, they just, get receipt here and there. That's even when they get. And just throw in numbers there just to reduce their profits. That will be very difficult now.
Okay.
Because every transaction that you do now, for instance, must be vetted.
Okay.
Unless where that transaction belongs to either the zero rated or the exempted list category. And the act now says any transaction on which you have not paid VAT. For instance, I know we are talking about withholding tax. I'll get there in a minute.
Yes.
Any transaction you have not paid VAT on, you cannot even just forget about it. It will be a disallowable expense.
Okay.
The same thing with withholding tax. Withholding tax is more like an advance payment of your income taxes.
Okay.
Unless where you fall within the exemption bracket. For individual, if you're doing 800 and below, or for a business, if you are doing 50 million and below, it don't fall within that bracket. For transactions that qualify for deduction of withholding tax,
yes,
the penalty is more stringent. If you're supposed to deduct and you did not deduct,
yes,
or if you deduct and you did not remit, there are different categories. There's a categories for if you're supposed to deduct, do not deduct, then you will be the one to bear the cost of not deducting it, and they may even ask you to pay penalty. But the worst is where you deducted and you did not remit, which means that you have deducted somebody's money,
yeah,
and you did not remit it. Then that will be even treated more like a crime.
Yeah.
And then you will pay the penalty, and there are other sanctions that will come on. And the way the system is structured now is such that it's so transparent. Every time somebody is not withholding tax from you, you can view and see that the person has paid. So gone are the days where people say they are deducting withholding tax from you just to reduce their obligations to you, with no intention at all of remitting that money to the government. Gone are the days; those days are gone. Because now I can go and check, based on I'll go on my account, on my profile, and just check to see that, okay, Mr. Samuel, you deducted 1 million from my money.
Yes.
It hasn't reflected on my account. And if I have proof that you have deducted it from me,
yeah, I
will just go to the tax authority. The tax authority will free me because you have deducted it from me. But they will come after you. Which is also a good thing, because before, what happens is that if the money was not deducted, they will ask me to self-charge myself. Then when they still go and audit Mr. Samuel, who did not remit, they will still collect the same money from him twice. So going forward, that is no longer going to be the case. If I can produce evidence that the money was deducted from me, I will not be subject to any further self-charge. It is the person who deducted and did not remit that will be answerable to authorities. These are just some of the basic way VAT will be impacted in the new law.
Okay, let's also look at this angle now, which is still a very big concern for Nigerians. That the angle of the impact it will have, the reform will have on inflation, unemployment, and overall, the end goal, according to the committee and the presidency, is that it's looking to also improving Nigerian economic growth and also the GDP. So, looking at all of these bills now, and it looks good. Obviously, most of Nigerians. Policies and initiative looks very good on paper, but implementation has always been the problem. But where Nigerians are calling on for now is around inflation and unemployment. That overall, how do you think it will impact the economic growth and the GDP of Nigeria?
Thank you. If it is properly implemented, I think it has the potential, and I'm choosing my words carefully.
Okay.
It has the potential to curb inflation. Because if it's well implemented, we should see a general fall in price levels, particularly when it comes to food inflation. That will be the ideal thing to expect, looking at the way, because people are paying less taxes on things they consume, and then in some instances the producers too are paying less on their inputs. So you expect that to impact on the price. So if it was costing me 1,000 to produce a bottle of my drink, and now I'm only paying 750. Unless I am just a wicked person, it just makes sense because I want to stay competitive. It just makes perfect sense that if I used to sell that product at say 1,200, I could even start selling it maybe at 900. So that is that. But then, like the 5% surcharge is one disturbing aspect of the bill, of the act, that has the potential to just neutralize the gain that we might have gathered elsewhere. So, and this is the issue that we always have with our laws. There's always something counterproductive somewhere, that has the potential to nullify the gain that you have recorded elsewhere. So, and of course, if you look at it on the larger scale, if we adopt a micro approach, we're looking at it from the small earners, from the income and earning potential of family is looking good. But don't forget, Mr. Samuel, at the end of the day, at the macro level, when you say the big players, it means that because they will be paying more.
Yes.
The big boys in business will be paying more. One way or the other, it will reflect in the wholesale price, it will trickle down into the retail price. So one way or the other, it will still get down to the masses. Because the most of the production effort is not done at the level of the masses. It's done, at industry level. You understand what I mean? So,
yes.
There is still that fear that, okay, at the end of the day, it may not really change anything. And if we're not even careful, it may even, push us up a bit in our inflation numbers. But then, there is no easy way out. That's just the truth. Rather than just sitting down and, allowing the fear of the unknown to stop us from taking any step at all. I think it's better that, okay, let's even start. When we get there and we look at it again, I want to believe that there is always room to amend, these laws and review them. So when we get there and we see the real impact, the real economic impact, there may be need for us, okay, we need to relax this aspect of the bill. And I can give you a good example. The Finance Act, which we started having from 2020, up until 2023. You discover that we were even reviewing it every year. For this thing to work, you cannot leave it for another 10 years. Because things are changing so fast. So I really want to believe that, maybe maximum every 2 years we should come back and look at this piece of legislation. It's okay, where do we need to adjust? What more do we need to inject? And if it is done honestly and transparently, because we will not get it all right at first attempt, but we cannot afford to do like what we did to the value-added tax act that was last done in 2007. The company income tax that was last done in 2004, and this is 2024. That cannot work because the business environment is changing so fast. Things are moving so fast. So every maximum 2 years, we should come back and look at it until we perfect, on the part of honesty and transparency, on the part of all stakeholders. Government is honest, the manufacturers are honest, everybody is honest about their own legitimate concern. I believe strongly that we might even have one of the best piece of legislation as far as tax is concerned in the region. and even globally.
Okay.
And that is what you see in places like UK and the likes. They don't leave their laws for too long before
they review them. Okay, which is actually another concern now where public interest really lies, because a whole lot of Nigerians have actually lost faith in the system based on the fact that they said the monies that have been paying for tax before now, they've not really seen lots of improvement or what these monies are being used for, even ranging from the removal of fuel subsidy, the amount of money that has been saved up, the public don't have proper information on how those monies are being used. Now, how can a common Nigerian man now, build trust and believe in the system that, yes, if I pay my tax and being diligent, that is actually going to go for what the government have actually, said the money will go for, which boils down towards healthcare infrastructure, and also education. What can give the common man the faith again in the system that if I pay this tax, it will actually be used for the development of the country?
I wish I had. I wish I was some government spokesperson. I would have been able to talk in that capacity. However, what I tell Nigerians, these conversations come up every now and then. Every time you talk about tax, somebody must raise this concern, and it's legitimate.
Yes.
Right. But the thing is, first of all, Nigerians should not be angry with FIRs because they are not the one spending the money. They just receive the money on behalf of government. I know because they are the one receiving the money, we often transfer the aggression to them.
Yes.
But in fairness to them, they are not the ones spending the money. They are just doing what they are supposed to do. That's number one. Secondly, I think there is some glimpse of hope in the sense that the committee, if you look at their mandate, you see that the mandate way goes beyond just getting this tax act and the other act together.
Yes.
In fact, Mr. Udele himself will tell you that that's barely maybe 25% of their work. Right? Their work also extends to even holding government accountable on how it spends public fund. And Mr. Udele has promised us that is going to be the next phase of their project. And we really hope that the same way they have held the general public accountable, we really hope that they will do the same to government by saying, okay, fine, now that people are paying more, we also need more accountability.
Yes.
We also need more transparency. We also need you to be more prudent in how you spend every dime.
Yes.
That we are receiving from the government. And they have assured us the best I can do perhaps is to just re-echo the promises that Mr. Udele has made.
Yeah.
And assure us that maybe not assure, let me say I'm hoping that they will implement those promises, and we hope that maybe in another couple of months we will see some of them structures that will be put in place to get government more accountable. We've seen something in Lagos where we used to have this. I don't know whether they still run it, but during Governor Fashola, he made his expenditure
very open,
whatever, public.
Yes.
Anybody log into the website and see
what's actually going on.
The government is putting his money and all of that. Even though he got into trouble for that, because then we saw where a particular borehole was dug for, I can't remember the figure now, almost two ridiculous and unthinkable amounts.
Yes.
But that is what it is. We need to reduce cost of governance. We need to, even merge industries and MDAs. Only make sure that we should deviate and depart from days where civil service is like a welfare scheme. And I know a lot of brilliant minds within the civil service who are contributing immensely to the growth and development of the country. But then you also see some others. You will see somebody who is a civil servant who doesn't go to work. They will tell you there's no, and it's not because they are lazy. They will tell you there's no work for me to do. I just go to the office and sit down. And then they earn a fee from public fund every month
for doing nothing.
When it's Christmas, they get some bonuses. When it's every festivity period, they get some allowances here and there. And there is no commensurate productivity input from those people. So definitely, you will not see the kind of impact that you expect to see. When government tells you we have spent X amount, you will not see that impact because it's not all of what is being expended, that is being really, really put into productive use.
All right. Thank you so much, Mr. Johnson, for taking our time to join us on today's edition of Discourse. Thank you for your well-detailed analysis on the subject matter. We appreciate you for taking our time to join us, Mr. Johnson.
My pleasure.
Yes. And then moving on.
Thank you for having me.
Yes, sir. Yes, there you have it. Like there's just a whole lot within the tax frame, and we really need to pay attention to details. Looking at it now on paper, the reform bill looks to better the life of every Nigerian, and those earning less would either pay less or not even pay at all after some deduction have been made. But the impact of the tax reform bill on Nigerian economy will depend largely on implementation, accountability, and inclusiveness. While it holds great potential to broaden Nigerian fiscal space and promote economic diversification, poor execution could worsen hardship for the citizens and also discourage businesses, just like Johnson made mention of the fact that if it's poorly implemented, it might shoot up our inflation rate. This is how much time will permit us to take on today's edition of Discuss. My name is Samuel Odi. I'll see you again as we discuss further. Bye for now.